Now, the next company in our radar is Nazara, which has reported a muted set of numbers. Revenues have not really picked up as the company had said they would in the third quarter, actually in the second half. So let's understand what happened. Nitish Mittersain is Joint Managing Director and CEO of Nazara. Thank you very much for joining us, Nitish. Prashant this side, morning. Can we start with the revenue number? What's the reason behind the muted performance?
So sure, Prashant, as you will appreciate, we are running a marathon and not a 100-meter sprint. And for us, the quality of revenue, improving margins is equally important, and it's not about growth at all costs. In this quarter, we saw some challenges in our Adtech business as well as our open play business, which is the skill-based real money gaming. As you know, that is impacted by GST. So some of the top line took a hit because of that. But as you can see, despite flattish revenues, our EBITDA has grown by 24% and our PAT has actually grown by over 40%. So I think for us, it's really important that we're setting a very strong platform and very strong foundation for much larger growth in the coming year in a very profitable manner.
Would you say, as compared to what you yourself guided on the con call after second quarter, this is a bit of a, you were expecting better numbers? So maybe unexpected challenges?
I think we expected the Adtech to grow a bit better. And also the impact of the RMG business came in from 1st of October. So you're actually seeing this full impact in Q3.
On Adtech, particularly, revenues have gone down 44% in Q3 and Q2 it was down 37%. You spoke about the loss of one customer as well. What's the latest on that?
So you're referring to the Adtech business because our overall revenue is up 2%.
So no, I'm talking specifically business, about Adtech, yeah.
Yeah. So for the Adtech business, you're right. Year-on-year revenue decline was 44%. But the good news is that our EBITDA year-on-year is down only 17% in this quarter compared to 9 months, 39% or so. So we're actually catching up on the EBITDA very fast because our Adtech margins have gone up quite significantly. So I think we're in the right direction. And I think next year you will see a resurgence in this business for us.
Okay. Across the board, actually, there's a bit of pressure across, in most businesses. I mean, Kiddopia, for example, is struggling to get new subscribers. Gaming revenues are down in Q3. Just trying to understand, are you expecting any revival anytime soon?
Absolutely. So I think two standout performances for us in this quarter have been Animal Jam, where we've seen the highest quarterly revenues in the December quarter, both in terms of profitability. And Sportskeeda is actually year-on-year 97% up on EBITDA. So I think our platform is well diversified. And despite the challenges you just mentioned, we are able to grow our profitability and withstand some of these pressures. So when things are better, you can imagine how we would grow.
Yeah, but when do you expect things to get better? And on an average, what are you expecting in terms of subscriber growth for Kiddopia?
Right now, it's difficult to say. Kiddopia continues to have user acquisition challenges, and we're working hard to improve it. But we're also trying to break the logjam by doing some IP licensing. We've seen some of the kid interactive companies globally do much better through licensing popular IP, which we haven't yet done in Kiddopia or Animal Jam. We're in advanced conversations with some large global IP holders to do this in the kids space. And I think that could be one great way for us to kind of bring back this, momentum to this business of Kiddopia.
Nitish, for the 9-month period, revenues are up about 9%, and I think margins are up about 180 basis points. Yes. Could you provide us with some sort of guidance for the full year? What will the numbers look? And for FY25, what should we expect?
Yeah, I don't have a specific guidance for the full year, but for FY25, I think two things. I think many of the challenges we faced in terms of the top line, for example, DataWorks, our telco business, etc., will be in the denominator already and won't hurt us next year. So a lot of the businesses that are growing for us should shine more or should impact the top line more in an organic way in FY25. The other important thing to remember is Nazara has been able to raise 760 crores from marquee investors this year. We brought in Mr. Nikhil Kamath We brought in SBI Mutual Fund, ICICI Prudential Mutual Fund. So some very marquee investors have backed us, and that has taken our cash reserves in excess of 1,500 crores. My team has worked on a fantastic pipeline of investments as well in the last year. And we also hope to action that. So I think FY25, you will see strong organic growth resume, as well as additional growth coming through new M&A that we are going to do.
Could you provide us with some idea about, without a specific number, margins? Because third quarter margins are around 14%, 9-month margins are around 12. I mean, what's the where will margins be?
I think Q4. So for the full year, the margin should be between 12 to 13%. Q3 is usually the highest margin quarter for us, but our push for across our businesses is to improve margins. I believe a gaming business should be a high margin business. It's not a 10-12% margin business. And while we've invested in growth, I'd like to start seeing much higher margins come through in the next couple of years. And that's the push my entire team is working on.
Okay, I just had one more question on real money gaming, right? The EBITDA loss that has been reported, that is as expected. But in Q2, you had guided for Classic Rummy to post an EBITDA loss in Q3 before stabilizing to break even by Q4. Are we on track to seeing that break even in Q4?
Yes, we should be able to achieve that.
Okay. All right. Thanks, Nitish, for joining in and giving us your view on the earnings. That's Nazara Technologies with their numbers and the pressure that they're facing in certain businesses.